It's Leung from Own Real Estate, the first week of November's market update, and here's why I believe prices are going to continue to go down. Here's some new data sets that I've pulled in graphs. In the first one, we're going to see median prices month over month and also contingent pending listings month over month. Peak median prices was in April 2022 for all counties here in the Bay Area. And so far in November, it has dropped to 1.15 from 1.388, which is somewhat significant. What's more important is what's going into contract, which contingent and pending listings peaked in March at 6,199, and October's full month of data was at 3,252, which is almost half of what it was earlier in the year. So the market is slowing down significantly. There's a lot less transactions right now. We expect November to trend lower than October, and this is going to be a continuing trend to end the year and possibly beginning of 2023 as well. A lot of that, as we already know, is caused by the increases in the federal rate, which is influencing consumer rates. As you can see, last week and the prior week, interest rates for a 30-year fixed rate mortgage were right around 7%. And just to show you how that influences buyers, so you know, if someone was to maintain a PITI payment of $6,188 to purchase a $1.388 million property, let's assume they have 20% down, which is $277,000. And then rates at that time in March, April was 3.75 for a 30-year fixed rate mortgage. To maintain the same payments, assuming that their jobs haven't really changed and then also their debts haven't really changed, right now, the 30-year fixed rate mortgage is sitting at about 7%, assuming they have the same amount saved up for down payment. With that payment and maintaining a payment of $6,188, now this consumer can only afford $1,082,000 home, which is pretty significant. Now, we have this tool that we've been using on sfstandard.com. It tracks San Francisco company tech layoffs. And so far, there is an increasing rate of layoffs so far in November and then end of October. And in fact, over the weekend, we saw that Meta, or Facebook as we know it, which has currently 87,000 employees at the end of September, has pre-announced that by Wednesday, which is 2 days away from today, there's going to be some thousands of people, unfortunately, getting laid off. Other things that I think is worthy to note is weekly inventory is up 40% year over year, and that's compared to 2020. I follow this gentleman, Bill McBride, which studies the real estate market quite closely. We're looking for seasonal bottoms, inventory up, which is year over year, and inventory up compared to the same 2 years ago in October. We're also now looking and seeing if it will trend for inventory being up compared to the same week in 2019. With all of that said, we also know there's already another rate hike that's expected in December and another one expected in January. And this is causing me to believe and for me to warn you that prices are probably going to continue to go down. Now, what does this mean? When prices go down because interest rates go up, well, buyers out there, when prices were high, it was because interest rates were low. Real estate values are a lagging indicator for interest rates, so I still would advise, based on your personal circumstance, is this a good time for you to buy? It possibly is, depending on what's going on with your lifestyle. The other thing to note is if this is a first home for you and you're thinking about buying or renting, well, your average peak to trough, as we've said on previous market updates, is typically over 3 years, and your average trough to peak, new peak, is typically 6 years. And if you're paying about $3,000 of monthly rent times 12 times 3 years of peak to trough and another 6 years of trough to peak, and you're thinking about waiting, well, that's going to be hundreds of thousands of dollars that you're going to spend on your rental. Now, given you do have to qualify with your income, your debts, you do have to qualify obviously with a healthy lump sum of reserves and also down payment. It is going to still be up to your own financial ability. we're happy to analyze it with you and see if this is a time that makes sense for you to purchase. Now, for sellers out there, with prices expected to continue to go down, I think we're seeing some short-term pain, but long-term with elevated inflation, I think overall prices in the long run will continue going up sooner, hopefully, rather than later. But when is this market going to change? We're not really going to know. A lot of people are saying that there's going to be a prolonged recession. We'll have to wait and see. Make sure you take care of yourself and your family out there. And regardless, we're here to give you advice on anything on the market, anything real estate. Reach out to us. Hope you found this helpful.